If Japan does not outright intervene, how much weaker could the yen get, Jane?
Well, I think the story there is very much dependent on what happens to US yields, because that's been the big driver between dollar yen. We've seen, of course, the Bank of Japan with its yield curve control policy holding down their 10-year yields on JGBs, whilst US yields, of course, pushed higher in response to the hawkishness from the Fed. So the answer to your question really much lies with those US yields. If US yields push higher, then dollar yen could push higher. But, of course, if we move into the end of the year, if people are beginning to think, well, the US economy could slow, if yields begin to turn lower, in a way, that could take the Bank of Japan sort of off the hook, if you like.
Do you think we're seeing intervention by Ministry of Finance officials here, Jane, in the market today? And just to recap the headlines that Kayleigh's been talking about, the Japanese Ministry of Finance officials saying they will respond appropriately on FX if needed, and recent FX moves warrant extreme concern. Because when we listened to Governor Kuroda speaking earlier on in the Asia session, early in the European trading hours, he didn't seem too concerned about what was going on in FX markets, and certainly seemed to be doubling down on the yield strategy to the expense of the yen.
Well, that's exactly right. And that's what quantitative easing, yield curve control particularly, that's what it is doing. It is pressing down on the yen because of those yield differentials. And that's why, in a certain degree, it would almost be nonsense if the Ministry of Finance, who is in charge of yen policy, if they were to order the Bank of Japan to intervene, because then the Bank of Japan, on one hand, will be intervening to support the yen, but carrying through with its yield curve control policy, which is because of the yield differentials, is weakening the yen. So that, in a way, makes intervention, or the concept intervention at this particular point in time, a little bit of a nonsense. And that's why the market is expecting that if the pain of yen weakness is too much for the Japanese economy, and that's because, of course, those input costs, those commodity prices that are used so much in Japanese manufacturing, if that becomes too much to bear, it's probably some sort of change in the yield curve control policy, which is probably going to be the number one thing that the Bank of Japan would do to try and push away from yen weakness.